profit. It's a day wherein a clutch of names have had yo-yoed through the day, and the markets have shown some resistance to fall. 0.5% odd for the Nifty and the Sensex, and been tapering between 0.2% or thereabouts. So the intraday of the chart should come up on your screen. You'll see a very tight range, but a fair degree of attempts to correct and recover. So that's the point I'm making. But still, the Nifty 0.5% higher, so no complaints out there, 24,700 or thereabouts. Mid cap and small cap indices very quickly before we get to the heat map. Remember, IT was leading the way at a point of time, but banks have now participated. And mid cap index 0.72%, and the small cap index should come up on your screen next. That's about 0.38%. So a bit of an underperformance, and I think this is on account of the fact that it's the Nifty Bank and the heavyweights which are participating, as a result of which that index is looking good, but some of the small caps are not. Get the heat map up on the screen, and let's see the nature of the winners in the session today. So life insurance right up there. Hersh will probably talk more about it, but SBI Life, HDFC Life, some serious strength out there. And then Bajaj Finserv benefits as a result of that. So that stock is up about 3.5%. Shriram Finance up 3% as well. IndusInd 2.5%, a bit of a surprise move according to me, because getting into the MF business doesn't quite warrant this move. But I would suspect that this is on account of banks per se doing well and not because of idiosyncratic news out there. And tech has some flavor to it. So not the top gainer today, but Tech Mahindra, for example, still up about a couple of percentage points and in the list of the top 10 gainers. What's gone down today? ONGC, a crude prices correction. Bharti Airtel 1.5%. Adani Enterprises down about 1%. Cipla, Tata Consumer. So that's the list. Essentially, Harsh, before you take over the mid caps, it seems to be that it's about financials and predominantly life insurance.
Well, yes, absolutely, Niraj. It's about the financials and life insurance. Those are the ones which are aiding at least the Nifty 50 in trade. But let's move on. Talk about some movers in the mid-small cap space, especially specific names on the back of both news-specific names as well as volume buzzers, etc. Let's first start off with Sequence Scientific. Pre-qualification approval from WHO for an API, that one is buzzing up 4% as we speak. Sequence Scientific, you're also seeing Motilal Oswal, 200 crore fundraise up 6%. Unlikely that that's the reason for the buzz, but you're seeing a lot of brokerages, or rather brokers, doing very well. Motilal Oswal and Angel One also in focus on the back of that. Angel One also is up nearly 13%, the top gainer in the mid space. Angel One in trade today. Share India will not take over DSM Foods. At least that was what shareholders wanted, and they've given them that. 4% higher in trade. Dronacharya Exclusives reseller of SIR radar products in the Asian region. That one is also higher. You're seeing good traction in IndusInd Bank. We spoke about that. Of course, approval for manufacturing of mutual funds, which is that they got an AMC license, as well as a Nomura note, suggesting a 17% upside. So both of those factors playing out well. Polymedi announces, yesterday was a buzz, in fact, one of the top 10 gainers on the BSE 500 list. And of course, they've announced a QIP. They continues to do well in trade even today, 1.2% higher. Floor price for the QIP is 1,881 a share. Saraswati Sari debuts on bourses, up 31% from the IPO price. So that one doing well as well. Nucleus Software considering a buyback, up 20%, locked in upper circuit. Granules India, that one, arm of Granules India has got US FDA approval for an oral solution. That one also doing well, nearly up 2%. Mind you, before the announcement, the stock was down around a couple of percent. So it's recovered from that and gone up 2%. So the move has been solid. Brokerages, UBS notes on KEI and Polycab, definitely in focus, keeping both those stocks well in the green in trade today. You're also seeing good traction on BPCL on the back of a constructive Citi note, opening a 90-day positive catalyst watch. Defense stocks in focus today. Well, you have Mazagon Dock, Cochin Ship, BML, GRSE, all of them lower in trade. Yesterday, Mazagon Dock took a tanking. Some of the other stocks held up okay. But today, you're seeing pretty much the entire defense pack lower. Other buzzers, there are tons of them. We'll talk about them along with our technical analysts. Both our guests will be joining us shortly. Torrent Power, JSW Energy, Union Bank doing very well in trade today. Sundaram Finance, I spoke about Angel One. All Cargo also doing well. Web of Global is also a buzz in trade. You're seeing Kaplan Point, Triveni, Prestige Estates and Oil India lower in trade today. So we've got a whole list of stocks and we'll talk about a lot of these themes on the show.
Well, let's get in our guests to talk about a lot of these themes. Kush Bora, founder of kushbora.com with us on the show. Kush, good having you. Thanks for joining in. Are you constructive based on the movement of the index, Kush, on either the Nifty or the Nifty Bank in particular, which has done really well in the session today?
Hi Niraj, first a very good afternoon to you and to all the viewers. Well, I'm a little more constructive on the Nifty. The reason being that, it's cleared some of the technical hurdles. There was this gap at 24,700, which was the first level to watch for. We put out this note a couple of days back. The next level to watch for is 24,950. Again, for convenience sake, we can round it off to 25,000. But that's the next level to watch for. Bank Nifty, on the other hand, we've been speaking about the play the range theme, where the higher end of the range is 51, 51, 100. We do see the Bank Nifty resisting, at that mark even today. If you see the call option set up, the 51,000 call for tomorrow's expiry also has a fair degree of open interest. But no surprises if it gets taken out. But at the moment, it seems like that might get respected. So we wait and watch. Bank Nifty, if you have an existing position, you continue to hold. But a fresh position only if we cross above that 51,000, 51,100 mark.
Okay, Kush, your ideas for this afternoon, and just couple that up with if your ideas don't have a life insurance name, then what do you do with those stocks?
Sure, Niraj. So a couple of stocks on my radar, incidentally, both of them from the cash segment. One of them is on the recovery path, which is HFCL. The stock had seen a sharp round of profit booking, 2-3 sessions ago, but has recovered quite smartly. So I think from a near-term perspective, 146, 150 are very reasonable targets to look at. 137 is a good support zone, so that should act as a stop loss. The other one is, one that's given a breakout, which is Gabriel India. Now, this stock has been resisting around that 510 mark for a good part of the last 2, maybe 3 months. And now it's given a breakout on the back of good volumes, despite, being almost 5% up for the day. I still have that conviction that, it could move higher from here as well. Again, near-term targets are 545, 560, 515 is a good stop loss, a level to keep, for your position. Now, I did check out a few names from the life insurance space. Again, most of these are, at the moment seeing a recovery, what you can call it at best. For me, there are these, hurdles, at the near term. So SBI Life Insurance, for example, has a hurdle at 1790. HDFC Life has a hurdle at 725. Once these are taken out, I think will there be more confidence in these trades? At the moment, the last 8-10 sessions of shorting is what we are seeing getting covered today. So no fresh positions suggested because the covering has been sharp and now they're very close to the resistance levels. But once maybe the resistance levels are taken out, 1790 on SBI Life and 725 on HDFC Life. Once these levels are taken out, perhaps we could consider a long position.
Okay, a couple of ideas there from Kush Bora. Do watch out for HFCL at 142 and then some others. But the interesting bucket has to be defense. Now, a few days ago, there was Nirmal Bang which came out with this note and spoke about downgrading the whole defense sector and a variety of views given by them. Now, what's actually corrected, viewers, is not the whole defense space, maybe select pockets within the defense space. So I think the pocket that one need to focus on is the shipbuilding stocks, because if you look at or around that space, so if you look at Mazagon Dock, Garden Reach Shipbuilders, I think Cochin Shipyard, those are the names that have had some serious correction. Now, Hersh, I found that note very interesting. Independent of whether I find it hard to believe that note is the reason, because I think the stocks have been falling beforehand. But Amit Dixit of ICICI Securities tracks a bunch of sectors very closely. For a DCF value to be 70% lower, I think the arguments that he's making, you could argue that there is no way to prove them wrong because you do not know what happens post FY27, sure. But that's an argument that can be made for almost any stock which is trading northwards of 50 times. So I don't know what you thought about it, but I'd really love to talk to Amit and question this this near 70% downtick that he sees in the target price for Mazgon Dog, because it's a business where the book-to-bill ratio is certainly impressive.
Absolutely, Niraj, you're right. The book-to-bill is impressive. There's a very strong government push, the theme from the government to try and make in India, to try and build in India. And that, at least in this term of the 5 years from 2024 to 29, does not seem to be going away in a jiffy. And therefore, the theme will stick. So I believe that there's of course some bit of extremeness to the view to a certain extent. But at the same time, there has to be a tempered expectation as well, which does not seem to be the case. Some of these stocks have already corrected nearly 25+% from their highs. Mazgon Dock itself is down, from 5,800 highs to whatever it is today. So they've corrected quite sharply in that sense. And therefore, clearly there is a bit of overvaluation, overheating, which seems to be getting, which seems to be correcting itself. But at the same time, for how long will this correction last is really a question.
Yeah.
Maybe some technical factors also to it. But on the fundamentals, I think everything will shift towards execution and how execution will play out. And how margins therefore will shape up.
Yeah.
On the back of the huge books that they've really built up over the last 2 to 3 years.
Yeah, and the assumptions in one of the notes was that we have visibility till 2027 or FY27 and not post that. I think at some point of time, today, tomorrow, viewers, maybe not today, but tomorrow, we'll try and get the management to try and understand what is it that they have to say with regards to their margin trajectory as well. Kush Bora, any thoughts on these stocks? They've already corrected quite a bit, but what is the downside or what is the support?
Well, again, I wouldn't go hunting just because, they've corrected. I think, that's a fair question as to where do the supports lie. For, let's say, something like a Mazgon Dock, the near-term support, the almost near-term support is at 40 to 75. But if that is taken out, you're looking at a 38-50 kind of a level, as well. On, let's say, a Cochin shipyard, it's already trading very close to that support zone of 2050. Once that is taken out, I think then the next level that comes in is actually about 1850. So this pain could perhaps accelerate some more. If you look at the momentum indicators, they've gone into a downward tizzy, but it's not anywhere close to the oversold territories. Now these stocks have enjoyed a brilliant run over the last couple of years. I think a fair bit of correction is warranted, but then again, as I said, because or rather lack of any fresh triggers and lack of any meaningful buying visible, on the charts also, I would suggest that, investors or traders wait before they go hunting into some of these names.
Right. Thanks for that, Kush. Before I come to specific names, let's quickly listen in. We caught up with the management of Mazgon Docks, Sanjeev Singhal, and he'd of course spoken to us earlier in the quarter. Let's listen into the outlook that he gave and what can be expected from Mazgon Docks going forward, because you're seeing a steep correction. Just to contextualize that, let's listen in.
I would not be assigning any numbers with respect to the top line, but yes, at the same time, considering the momentum at which we are executing the projects right now, I definitely expect that over 22-23 there should be a decent growth. A better clarity would be visible to us also during Q3. As far as deliveries are concerned, during this financial year, we are eyeing for 3 deliveries. One destroyer, which is the last destroyer of Project 15 Bravo, the first frigate of Project 17 Alpha, and the last Scorpion submarine, that is the 6th submarine of the Project 75. Apart from this, if things go well and as per plan, then maybe we can look for a second delivery of the frigate also during the financial year. So that would be a record performance by itself. However, the second frigate remains a bit touch and go kind of a situation. It could be the end of this financial year or early next financial year. As far as the bottom line is concerned, yes, going ahead also, we see reasonably good margins, whatever we have been posting. because the deliveries are happening as per the schedule or prior to the schedule. As a matter of fact, in case we are able to deliver the last destroyer by October also, this would be almost around 5 months before schedule. And any delivery before schedule has a significantly positive impact on the margins.
Okay, so that's Mazgon Doc, talking about how things are going to play out going forward. But time for a quick break. On the other side, we'll be joined by the management of Piccadilly Agro. Stay tuned for that conversation.
Right, back with India Market Close right here on NDTV Profit. Mr. Dharmendra Kumar, whole-time director of Piccadilly Agro, is joining us on the show. Mr. Kumar, good having you. Thanks for joining in. Just before we get down to the business conversation, did Piccadilly Agro again get awarded for the best whiskey or something like that? Could you just fill us in on that?
Yes, there is really good news down there. We've kind of cemented our position. It all started with Indri Trini winning a lot of world awards, and Diwali did the cementing part, and then this year we've been honored with again the best whiskey in the world for Dhruv. So this is the third expression that has been awarded the best whiskey in the world, and we are very happy to say that.
So this is a recent development, and you said you've gotten an award for the whiskey which is branded as Dhruv.
This is Dhruv. This is a cask strength edition, which is predominantly overseas sales. And because India doesn't allow sales of whiskey above 50%, so this goes mostly to the export market. And this has been really appreciated world over in Europe and in America.
Okay. So just tell us, I mean, what does firstly, congratulations to you and the team, of course, that built this out.
Thank you so much.
Which is good news. Now, tell us, Mr. Kumar, what does this mean? Because when Indri won that Best Whiskey Award, I remember a conversation with you or one of your colleagues talking about what this means in terms of demand, because the talks were that demand will go up for this whiskey. You may not have the adequate capacities right now, so you'll probably build capacities and hope for higher sales as times to come. Now that while that tailwind was behind you, you've also gotten this award. What does this mean for demand for those two as well as some of the other products from Piccadilly Agro?
So what is happening, sir, right here is that demand is, of course, outstripping supply, but I think that is a smaller story for the company and for, I think, the country. We are at this threshold which Japanese whiskey was 15 years ago, where, you know, they became really popular and still are very popular in a big space in the world is attributed to them. Indian whiskeys never had a niche. You would go to a stall, there would be world whiskeys, and India would be part of the world where there are smaller people, and Indian whiskeys will be part of it. But going forward, I think every stall will have a Scotch whisky, a Japanese whisky, Irish, American, and an Indian whisky stall. And that, establishing that as, you know, a benchmark is where I think where we've been successful. And that is going to help us immensely, and of course, the whole category per se.
Got it, Mr. Kumar. Hersh also joining in. I want to try and get in your view as to how this is going to contribute to numbers going ahead. So as you scale, as you build, what's the kind of trajectory that we can see both in numbers on revenue and margins?
So numbers, I think we are very bullish. We think we will do a 50% growth on revenue in the single malt space this year. The industry is growing at about 35%. I'm talking about the Indian single malt industry. That is growing at about 35% year on year. And we expect to grow slightly faster than that, owing to the growth that we've seen before this, at 50% year on year. And going forward today, for example, the Indian single malt space is about 400,000 cases. That's 4 lakh cases of Indian single malt. We already are 24% of that, 1/4. And of course, you know, getting market share more than that, going to 30 will be tough, but the market is growing at 35%. So there will be a lot of pluses for everyone here. In the single malt space, when we say the world single malt, that is all Japanese, American, Scottish and Indian single malts put together, we already have a 12% market space. So we would want to increase our market space more in that space rather than just the Indian single malt space.
Okay, and sorry, please go ahead.
So, sorry to come in.
No,
so
sure.
If we see last year the numbers we achieved, so we were positioned at the 18th spot worldwide. So no Indian whiskey has ever been at number 18 in the single malt space in the world. And 5 year goal from here is to scale it up from number 18 to number within the top 5, and that is where we are aiming to go. And you know, we feel really proud because the whiskey under us is Lafayette, and the one above us at number 17 is Lagavulin.
Understood. So point taken. I mean, as Indians, we should all feel proud about this because it's considerable progress in a space where we've lagged a little bit globally. But I also want to try and pick your mind on where, therefore, what's the kind of tailwind when you're suggesting a 50% growth on top line? What's the visibility like? Do you expect that to continue over the next 2 years, 3 years? And where should, therefore, margins go? Because your margins have risen sharply when I'm looking at the FY24 full year numbers versus FY23 full year. What's the sustainability of that, and where should it go from here, given the premiumization you are targeting?
So before this, most of the numbers were coming from conventional IMFL brands, where the margins are typically 15% to 18, 20% maximum, and the sugar part of the that we were looking at here, and that was just 5%. Whereas when we come to the single malt space, our gross margins are upwards of 70%. So what happens there is then you, of course, the spends are more, you're investing more, but then you have so much more margin to employ capital into the market.
So therefore, what does it move to? I mean, does it stay at the levels? Precisely the question that Hersh was trying to ask. Would you improve upon what you did in FY24, because you nudged operating profit margins of what, 25%, if I'm not wrong, in March 2024 quarter? Do you think you sustain that?
we will this year will be a marginal increase of at least 5 to 6%, owing to newer brands like we spoke about Drew and the Game of Thrones series which has come in, which are priced at a higher price point than Indri, which was our main sale last year. So those will definitely give us better margins this year.
Sorry. So 2 questions now. March 24, about 20% for the year. FY24, 20% margins. March 24, the quarter, 25% margins. Are you saying you will grow over the March 24?
No. We'll grow over the whole year margin by about 5%.
So you probably balance it at about 25% for the year at large.
Yes.
And similar thing, Mr. Kumar, to return ratios, because ROC showed a quantum jump in FY24 over FY23. Now that the business model is changing, do return ratios look that high, 30% numbers?
The return ratios on ROC might not jump so much in this year, because we are employing a lot of capital. We are right now doing 4 new projects as we speak. So the Indri project is going from 12,000 liters all the way to 30,000. The Indri ENA IMFL project is going from 90 to 250 KL. The Chhattisgarh plant is under implementation, which is a 210 KL plant with a 30 KL malt space there. So all these projects which are ongoing, there will be a lot of capital employed here. So then of course, that it will take a year or 2 years for that ROC to come see the same numbers that we saw last year.
Got it. And sir, what would you attribute this to, this kind of sudden jump that we've seen in terms of performance? One is, of course, it's very difficult, please correct me if I'm wrong in my understanding, in the alcohol industry to build a brand, especially in the Indian alcohol industry. And you've done that, at least it seems, with significant gusto. Maybe that is one thing that's helping your numbers. Is it premiumization? Is that the other thing? I'm just wondering what is really aiding your numbers and why such strong numbers and such strong commentary?
I think, there are multiple factors like you mentioned, but number one is if your product is good. If you see, you don't have to look at alcohol as an industry. If you see any industry, anybody who's giving you a quality product consistently over the years, that product will shine. And we've made sure from day one, when we started the malt division in 2010, this is 2024, we are 14 years ago, and we've been employing capital in this space for all that period. We just broke through last year. But for those 12 years, we were giving in everything that we could, heart, sweat, and money into it. And the objective is very clear that this is where we want to reach. And when you will reach, we did not know. And it happened last year. So the product has to shine, number one, because you can have a great marketing ploy, you can have a great packaging, the market could be right, but if the product does not deliver, then people will not come back to you. And alcohol is very personal. This is something you consume. So, it's not like something you bought for the house and put in a corner. So this is something you like, only then you will consume it. So I think product is the champion. The timing, India story, where India, the premiumization in India, people are now wanting to know what they're having. They don't want to be blindsided. It's happening in all other FMCG products. They want to know what they are drinking. What is the quality of the product that they are having? They'll drink less, but they'll drink better. I think that's what's happening in India right now.
Mr. Kumar, one final word really, and which is, by the way, we should do a show out of one of your manufacturing facilities. It'll be really nice to see that.
That will be lovely.
But just one final question, and an extension to what Hersh asked you earlier. Assuming that it's a blue sky scenario, Mr. Kumar, and that the reception to the products that you're manufacturing is better than what you anticipate, what is the outlook that you're setting yourself up for? Because 50% in a year, slightly better growth in the next year is easy to figure out. Since this is a long game, almost every liquor manufacturer who's spoken to us in the last 15 years that I've spoken to them talk about the long game. What's the long game? How long? What can Piccadilly Agro really be like, let's say, by the end of the decade?
I think that's what I started off with when I said we kind of cracked the top 20 and the 18th largest selling single malt whiskey in the world. And the goal here was to be in the top 5. So all the people who are there in the top 5, or even even where we are saying till the 20, they're all 100-year-old whiskey companies. It's not tech, so it's not going to go out of fashion. It's not going to change.
I'll rephrase my question, sir. I'll rephrase my question. Maybe one whiskey, maybe two, maybe three, and all of that is really great, reaches top 5, top 10. But from a business perspective, from an investor's perspective, it'll always be about what's the size you can get and at what margins that you can do that business.
So this year is going to, I think you're going to see a few exciting things coming from the House of Piccadilly, different brands within the whiskey space and outside the whiskey space. There are lots of things in the making, and I think I can't let the cat out of the bag already, but before the year closes, you will have definitely a couple of more shining stars from the company. And Kamikara, again, we've dropped that already, which again should be a big driver, because as you see, a lot of rums have now started coming up. People are realizing that we, being a sugarcane growing country, don't make a good rum at all. And sugarcane rum is far superior. Just 10 seconds I'll take of yours. So rum is made from molasses or sugarcane juice. The French used to make brandy. So all the colonies that the French had used to make rum out of sugarcane juice because they did not understand how to make it out of molasses. So they made it as close to brandy as they could. So our rum is more akin to something which is like a brandy, and it's a finer product. And that's what the southern India drinks mostly. But today they're drinking something made out of ENA. That transition to actual brandy or rum made out of sugarcane juice is something we are very bullish about.
Okay. Well, Mr. Kumar, I look forward to talking to you in person.
And a distillery visit.
And a distillery visit and a studio visit maybe from your end too. But thank you so much for joining in today.
Thank you. Thank you, Niraj, so much. Thank you so much.
That's Piccadilly Agro. Optimistic. I was hoping for some sense about what the numbers. Before we take that break, did he give a response to what beyond FY25 to your question?
No, he didn't. He suggested a 50% growth at least in FY25.
But nothing beyond
But that itself takes your top line to around 1,000 crore. And the market cap currently is sitting at roughly 7,000 crore. And therefore at a 25% margin, it's roughly trading at 30 times EBITDA. If that math is right, at least basis whatever he said.
Okay, let's slip into a break. On the other side of the break, we continue a conversation with Kush Bora. Maybe ask him about some of the liquor stocks, get in Agam to talk about the derivative space and more. Stay tuned. Back with India Market Close right here on NDTV Profit. Just a quick check on the global markets. Europe is trading flattish, nothing too great, but just about hanging in there in the green. The Dow futures too, just about flat. So nothing too dramatic happening in the world markets for sure. FTSE is down, that's idiosyncratic. It's a flattish global picture. Agam is standing by to dissect the derivative cues for the day today on a flat day rather, or not a flat day really, Agam, because it's 0.5% higher, but it's okay.
Sure, it's okay, but Niraj, at least some will have been taken by surprise because we were actually expecting range-bound movement, and the Nifty actually were moving back about the mark of 24,700. It's not a big move. It's just something which wasn't expected, and we don't have too much traction in the open interest, but the underlying feeling is still towards the positive. Of course, it's going to be a big resistance around 25,000. We're not too far away from there. We're not too far away from life highs either. But it certainly is going to be a tough one to take out, as far as 25,000 is concerned. But, the fact that we're hanging on to 24,700 is always going to be a plus. Moving on to the Bank Nifty, that has also inched back towards the mark of 51,000. So that again is a positive, a 1% up move there on the day of a Fin Nifty expiry. Moving on to, your options market as we move into the trade this week again, while 25,000 does have a lot of call accumulation. It also is going to provide you with a little bit of resistance on the lower end on expected lines, a lot more writing, shifting higher to 24,500, 600 and 700 levels as well with respect to puts. And coming down to stocks, let's take a look at where things are fanning. Of course, the Fin Nifty is an easy one to call out, and I reckon that it is going to be somewhere around 23,200, 23,250 in thereabouts. But also possibly because a lot of traders saw the strength come through. So this is where we are going to see an expiry coming in. But, let's talk about stocks and longs for Voltas, SBI Life, ICICI Prudential, HPCL, all of them advancing in trade with longs coming through. In terms of stocks which are seeing unwinding as well, about a short covering for India Mart, Intermesh, Balrampur Chini picking up once again, Ipca Labs as well. So short covering seen there, long unwinding for Birlasoft and Hindustan Copper. All in all, turning out to be a reasonably good day for the broader markets too. Wait and watch on the Nifty then.
All right. It's a good day, definitely. We also have Himang Jani joining us. He's, of course, an independent market expert. Mr. Jani, let me come to you straight off. Some of these life insurance counters doing fairly well in trade, and they've done well over some period now, over the last at least couple of months. Do you believe a little bit of the overhang going away is contributing to these factors, a little bit of more confidence from investors coming through, or is it just undervaluation or an under ownership in some of these counters?
So good afternoon. Thanks for having me. So clearly, insurance has been showing a lot of strength over the last, let's say, couple of months, and primarily my reckoning is that a part of the money has moved into insurance because the banking as a sector did not perform that well, and there are certain challenges. So that's the primary reason. Apart from that, when you look at insurance company this quarter, I think most of the companies have reported a very strong annual premium growth with stable margins. So I think a combination of these two factors have led to some sort of a strength across the insurance companies, not only just life insurance, but also general insurance. And within the pack, what we like at this point of time is SBI Life and HDFC Life. These are the two names that we prefer at this point of time.
Okay, Kush, if I can come to you, I know we need to speak about Alcobev, but if I can come to you about life insurance first, because there are some real buzzers there, especially on the Nifty 50 itself. You have HDFC Life and SBI Life among the top 5 gainers on the Nifty. Your quick take with regard to some of these names.
So, Hersh, as we just spoke, both SBI Life and HDFC Life are close to their resistance levels. So if you've got an existing position, I don't see any harm in holding, your current position. But for a fresh position, I think, it's best to wait out because, these levels aren't really too far off. So in SBI Life, the resistance is at 1780, and for HDFC Life, it's at about 725. So once these levels are taken out, I think, you could see a more meaningful correction. Or if that doesn't happen, then, these stocks could again, once again go into that consolidation mode after that sharp run up that we've seen over the last 2 months.
Mm-hmm. Okay. Hemang, we were talking to Piccadilly Agro just a while back, very tall targets on what they could do going ahead. Liquor companies, by and large, with the market having broadened, but also spread out in the sense that good brands are no longer the domain of just the one or two key leaders which were there. A lot of newer companies are producing such brands as well. Do you like the space, and do you like something within this space?
Niraj, the space looks quite interesting because when you look at the data points, most of the companies are showing, good volume growth, be it United Spirits, United Breweries. Some of the smaller companies are showing far more excitement, be it Global Spirit, Piccadilly, as you said. And what is very interesting to note is that some of these smaller companies, they are able to create brands which are doing extremely well, which we did not think probably 3 to 4 years back. So that is definitely, good takeaway. So our take is that it makes more sense to be with the leaders. While some of these mid-cap companies, they do show promise, but when it comes to investment, we prefer something like a United Spirits or United Breweries because of the fact that wider distribution, better brand portfolio, and better earning visibility.
Okay, Kush, your take on some of these names?
So a lot of these names had shown, a bit of spark, but then, the fizzle out has actually been equally sharp. For me, after a bit of a scan, I think a couple of names that stand out are United Spirits and GM Breweries. These are the only two that have perhaps got some kind of strength in them, at least technically speaking, to move higher from here. If you see United Spirits is taking support at the 20-day moving average, I would be surprised to see 1450, 1480 kind of moves, but that again is a positional target. The support comes in at about 1360. GM Breweries is on a recovery path. It took support at the 50-day moving average, has made a very strong base near that 760 mark, and is on the way up. So on the way up, I think you're looking at 875. And then perhaps a 925 also. So these are the two stocks that I would have on my radar from this space. The others haven't really formed a very convincing base after the kind of sharp downturn that has come about.
The stock that is up today, amongst everything else, is Allied Blenders. New kid on the block, but 310, about 3% higher today on fairly decent volumes, I say, relative to the average volumes as well. So Allied Blenders is something you might want to also keep in mind. But what you should definitely keep in mind is KEI Industries. It's in focus on the back of a UBS note. The stock jumped up about 8%. Puneet joins in to talk about what is it that was so newsworthy in that note. Puneet.
Well, thanks for that. So they've initiated coverage with a buy call and a target price, which is a potential upside of 40% from the previous close. So some of them we've seen some gains on that. Now, they've said that, KEI is a market leader and has the highest presence in the, home cables and wires segment, and is looking to, increase its brand segment going forward. They have said three key things in this particular note. The first one is that they see scope for market share gains in the branded wires segment and are expecting the branded wires segment to lead in cash generation as well as better return ratios going forward. The second thing is they're mentioning strong balance sheet as well as improving the brand segment as well as the brand strength going forward, which will also aid other wire makers. The third key segment is that they're expecting a top line growth and a revenue and a EBITDA growth of roughly 22 and 31% respectively over the next couple of years by FY27, estimating that top line CAGR will be led by the branded segment. Now this has also led to other wire makers being very positive because we've seen this focus on from unorganized to organized going forward, and that's why UBS is positive. We've seen some gains already on this particular stock, KEI Industries, but we've seen some gains in Polycab as well as RR Cable since the morning, and this whole space has been buzzing because of that. Back to you.
Okay, thanks for that, Puneet. But while this one has done well, Ola Electric has slipped in trade today after an electrifying rally. What would you watch out for now, Puneet?
Well, there are some factors in valuation being one of the key things. EV to sales are roughly around 12 times now, which is, much higher than the other new age companies as well. But doesn't seem some restraint today seen in the trade today. But, the valuation, it listed at around 5 times EV to sales. And that's been one of the key things that, which new age startups get, which was a good valuation, but now might be unsustainable. Let's see how, this particular segment goes forward too. The other thing is that entry into the EV bike segment that they announced on the 15th of August, it's a very niche segment, just around 10 to 12,000 units sold in the past year versus roughly 9.5 lakh scooters sold. So we are seeing that they'll have to be a category creator, might need a lot of investments as well as capex going forward in this. They're also getting into a new platform, the Gen 3 platform. Current bikes and launches will be on the Gen 2, so watch out for this particular scene. The other thing is, it's going to be a loss-making company for the next 8 quarters. That's what HSBC has forecasted. They are expecting them to be, the first profits to come in only after FY27. There's still some time away, and while we have seen that the EBITDA positivity of the automotive segment specifically might be around in the near term, this is one of the key things to watch out for. And finally, something that we discussed this morning on the top 4 segments, the top 4 makers having like roughly 48% share now versus 15% market share earlier. We will be seeing a lot of crowding in this particular space, but specifically for Ola Electric, valuation will be a talking point going forward as well. Let's see how the market reacts to any kind of news flow on bookings or the August monthly sales number as well, and reaction to if there is extension to FAME 3, among other things to watch out for. But for today, these might be the factors that we are looking out for. Back to you.
Okay, thanks for that, Puneet, for breaking that down quite comprehensively. Kush, I know charts look difficult on this one because you have a very limited time frame, but just in terms of any, technical factors that one needs to look out for when they're looking at Ola, especially with regard to demand supply in the market.
So, Hersh, extremely limited data. I could perhaps fall back on, volumes, but that too, again, has been, so varied and so volatile that it's a very difficult thing to, take a call on. I would actually rely on, what you, Puneet, and even Niraj have been discussing, more on fundamental factors, very limited data in terms of technicals to give any sort of, cues.
Mr. Jani, of course, from a bottom-up perspective, it'll be good to have your views because it'll be far more constructive. Of course, Puneet has spoken a bit about it, but your views?
Clearly, the way the listing happened and post-listing, the kind of action that we saw was quite interesting. But fundamentally, what we feel is that the EV penetration remains very slow and gradual, and our sense is that the competition will remain very intense, especially from the larger incumbent players, be it Hero Motors, Bajaj, TVS. So while because of the technical factors around listing and the buying, selling that happens, there might be some excitement around Ola, but I don't think the numbers and the story justifies the market cap which it is commanding today, which is close to about 55,000 crore. We continue to have preference for the incumbent players, be it Bajaj, Hero Motors or TVS. We think that there is a far more stability and visibility vis-a-vis the valuation.
All right. So that's pretty much quite a bit on Ola Electric. Of course, trading higher by around 80% versus its list price, but 6% lower today. Niraj, you had a small discussion earlier today morning on Editor's Cut with regard to Ola Electric. I think it's played out largely in favor of what you were suggesting. Any quick thoughts now post the reaction?
No, just that. I mean, trees don't grow to the sky, so they went up quite a bit. See some downfall. Who knows? I mean, it could be 200 before the end of the month, right? So difficult to kind of call this, but just that the valuations seem fairly egregious. So no surprise that. I mean, the pullback could happen yesterday, day before, can happen tomorrow, what have you. But no surprise, 12 times CV to sales. The other companies available at about half the valuation of Ola Electric. At some point of time, it has to see some gravity. So it's starting to see that today. Let's see if this were to continue.
Right. Couple of quick notes where we've had is one has been on IndusInd, a Nomura note coming through that the AMC license that they're going to be receiving is not significant, especially on the current numbers in the way in which numbers have been. BPCL, of course, positive catalyst watch by Citi. Both of those buzzing in trade. Let me first go to Mr. Jani. With regard to IndusInd Bank, of course, valuations look slightly attractive in comparison to some of the other larger lenders. But just in terms of a 2.5% to 3% move today, overall banks have done well. But do you believe that there's a significant shift, if at all, with this new AMC license coming through? Is this angle strong enough?
I don't think so. Getting AMC license, these days will not move the needle too much for market cap that IndusInd Bank is commanding. Also, the fact that the banking as a sector has not done so well in the last, let's say, 2 or 3 months, it has underperformed Nifty, and IndusInd Bank in particular has underperformed the bank Nifty also in a big way. So we think that one needs to be a little careful about what you're getting into in the banking sector, and we prefer ICICI Bank at this point of time because within the entire universe, there are very few banks which reported good numbers. I can only think of ICICI Bank and Federal Bank. These are the two banks that delivered a solid set of numbers. The rest, there was some challenge on the margins, slippages, etc. So not too gung-ho on the sector overall.
Okay. Well, 3:20. So that time of the show when we get in closing strategies, Kush, to you, your top closing strategy for the day.
Niraj, Dr. Lal Path Labs continues to surprise on the upside. It's had a near vertical run for the last 4 or 5 months, but doesn't seem to stop. And again, even when I say vertical, it's not really been as exaggerated a move. It's been with its fair share of pauses. So continues to surprise on the upside. The options data also suggests that 3400, 3450 is perhaps on the anvil. So from a BTHSC perspective or a near-term trade perspective, those are the targets that you could look at. On the downside, 30 to 90, just under the 3300, the support mark is where you can place your stop loss. So that's one stock that you should keep on your radar. And anyway, we've seen the healthcare space be in focus, time and again, a few stocks, be it from the various subsectors of the healthcare space, be it pathology, be it pharma stocks, be it hospital stocks, they keep popping up. So I think, the sector's also in flavor. So that's also a tailwind that, Dr. Pathla will receive.
All right. So now, Niraj, we were just speaking about how 25K on the Nifty, whether it's a possibility given the kind of move we've seen today on the Nifty 50, we're 0.5% higher and we're holding. Kush, first, let me take your views. 25K, how likely, how possible, how quickly?
Well, it's certainly on the anvil. I will not deny that. But, I would perhaps give it, a week's time, if not more. The reason being that, in the FNO show today, this morning, I was talking about how 24/700 has been adding, a lot of call base. The market has respected that. So despite the kind of contribution that the bank Nifty gave today, Nifty wasn't really able to take out 24/700 in a very convincing way. So I think there might be some consolidation that we could see going forward. But as long as we hold above the 24,500 mark, I think 25,000, 24,950 is, the next level to watch for anyway. So perhaps some consolidation, but as long as we hold above the key levels, the bias remains positive.
And sorry, Kush, just to add here, what will it take for 25K to get breached? Will it be participation from banks? Because that's the one space which from its 52-week highs is well off and has a very strong weightage as well on the Nifty.
So that's a very good question, Hersh. I'll tell you, 51,000 is the level to watch for on the bank Nifty. IT's played its part. Some of the other sectors, from, as we mentioned, healthcare, pharma, they've played their part. Bank Nifty leadership will be the kicker. If Bank Nifty is able to cross 51,000 and, maybe just about 51,200 kind of zones and take charge, I think 25,000 is a very easy target for the Nifty to hit. If the Bank Nifty then in fact comes up, in a uptrend, then I think you're looking at new highs. But I don't want to get ahead of myself because, that's the level that the Bank Nifty has not really been able to cross for some time now. So the participation from Bank Nifty is what will take Nifty closer to the 25,000 mark, rather soon.
Okay. Well, completely out of time. We'll have to take a moment to thank both Hemang Jani and Kush Vora for joining us today. Gentlemen, really appreciate your time and insights. Many thanks for joining in today. That's the view, and we're just 4 minutes away from market to shut shop. Just before we start wrapping up the markets, a slice of an exclusive conversation I had with Citi's team, a research team about the impact of the Fed rate cut on financials and their top stock ideas from the auto space. Listen in.
It will be bottoms up, I would say, because many of them have been able to hold on to the growth in particular. When we look at it, at least there was no moderation on the growth side, and it was pretty much in line or better than the expectations for few of the leading players. There are some pockets of emerging stress, I would say, like unsecured, but secured lending is holding on relatively well. In fact, margins also, many of the players have been able to hold on, and if there is a narrative which is setting with respect to the rate cuts or at least the easing of the wholesale rates, that would tend to benefit NBFCs much earlier compared to that of the repricing on the deposit side. So we have seen NBFCs outperforming to an extent. There has been re-rating which has happened in many of the names, but we believe that if they continue to hold on to the asset quality performance, there is still the scope if growth and margins are largely maintained.
I think two-wheeler demand per se this year, we are building almost 7-8% kind of a growth YOY. One thing to note that in passenger vehicles, while we have already crossed the pre-COVID peaks in FY24 itself, in 2 years we are yet to reach it. So there is a bit of a pent-up demand. But again, the competition is very, very high. And there's a strong crowding that happens in segments. Like last year we saw in the premium segment, everybody launching bikes there. Now we see the 125cc segment. Everybody is launching bikes there or upgrading their variants, right? So because of this competition, despite a very strong demand, the pricing is always constrained. And that's why while we are, we believe that the volume growth would be high, we have a pecking order in terms of the stocks that we would prefer. We still like Hero a lot. Valuations obviously help. They're also levered more to rural. So if that uptick happens, again, positive for them. Other part where two-wheelers is, some of them have a very strong exports exposure. And their things have not been as great as we were expecting them to be. Commentary by OEMs, by part makers, every commentary suggests that the expectations of a resurgence in exports hasn't really been fulfilled. So we are more positive on domestic rural themes. So we like Hero. We also like Eicher, but Hero would be our preferred pick in the two-wheeler space.
All right. Well, I hope you got the sum and substance. There are a lot of stocks which are flying around. Obviously, we can't cover all. We tried to cover most which were important. Let's start wrapping up the markets now. Take a minute to talk about the large cap and about 0.5% or slightly less than 0.5%. But banks, by the way, banks have given up some of the gains because they were up about over 1%. Now just 0.7%. So we're not closing above 24,700 as well. So bear that in mind. Bring up the heat map and show what's happening at the large cap end of the market. A lot of green, very little red. It's just that I don't think too many stocks have gotten added to the losers list. It's just that the stocks which are gaining, some of them have given up some of their gains. But life insurance is not in that pack because SBI Life has only added and is now ending the day 5.5% higher. HDFC Life, Bajaj Finserv, that's the bucket that has really stood out in trade. Then some gains to a Hindalco yet again, some gains to a BPCL, Bajaj Finance, Divi's, Grasim. So that's the clutch of names which have done well. Few losers, like I said, Adani Ent, Bharti, ONGC. What about the mid-cap space, Hersh, or the broader end of the spectrum?
Well, let's pull those up. Let's pull up the Nifty mid-cap, largely in line with, so we're around 0.8% odd higher on the Nifty mid-cap. Let's pull up the Nifty small cap as well. There you go, largely in line with where the benchmark is at. Let's pull up the BSE 500. Some names which are buzzing. Angel One, even Motilal, in fact, was buzzing or is buzzing in trade. So some of the broker names are doing very well along with the life insurance pack. The broker pack in the SMID segment is doing very well. You have Web of Global doing well. Poonawalla FinCorp up nearly 8% odd. KEI, of course, on the back of that positive note. Motilal, you can see now on the bottom, around 7% higher. Some of the ones taking it on the chin are some of the shipbuilding stocks. We spoke about that on the show. Mazagon Dock, Cochin Ship are some of the names where you're seeing some bit of pressure, at least at close today. We'll have to wait and watch and see whether it'll be a third straight day of losses, especially for something like a Mazagon Dock. But we've closed for the day. And we've closed around 9% lower on Mazagon Dock, Niraj, along with that Kaplan point lower. And
First Source lower.
First Source also lower. Yep. But with that, completely out of time on this edition of the show. From Niraj, myself, everyone who puts the show together, thanks so much for watching.